In this video, I will tell you my top 10 reasons for why I think NFTs are horrible investments. And although I posted a lot of negative posts about NFTs on my Instagram, I've never actually covered the topic on YouTube. Recently, the topic of NFTs has gained a lot more mainstream attention, and since I've made hundreds of videos on 3D graphics, as well as having a background in economics and finance, I'm about to complete my master's degrees in a few months. I thought it was time to cover the topic properly on my channel as well. And this video is primarily going to focus on the financial and investment issues related to NFTs and not environmental issues and so on that you get with cryptocurrencies and NFTs. Now, my first problem with NFTs is that the only way you can make money with NFTs is if you find someone who's willing to pay even more for the NFT, meaning that it's not a productive asset. If you just keep your NFT in your wallet for 1 year, you will see that you still only have the NFT. But if you have a farm or a stock, for example, you will not only have the same share of the stock, but you will also have some dividends, most likely because it's a productive asset. You can of course give the same argument for not investing in oil, gold, silver, and any other commodity, but you have to keep in mind that these commodities have a lot of value as inputs for various industries, and people are generally not advised to use these commodities as investments anyway. So the fact that NFTs produce no yield is a great reason not to buy any NFTs. And a second reason to not put your money in NFTs is that there's no organic collectability, no wear, and fake scarcity. So let's compare NFTs to traditional antiques and collectibles, as well as historical pieces. And when we, for example, take a look at Action Comics number 1, which was recently sold for $3.2 million, you have to keep in mind that when this comic book came out, it was just kids buying a comic book to entertain themselves and to consume. So most of these comic books were treated like we treat newspapers today, were just to be consumed and then mostly thrown away or treated very badly by kids. And nobody could foresee the cultural influence of Superman that we have today. And because nobody looked at it as an investment, there are very few that are still left in great condition over 80 years later, and that's why it's both rare and valuable. And when collectors, especially in the late 1970s, started seeing these old Action Comics appreciate in value, they started hoarding newer comic books. And that's why, when you take a look at comic books from the late 70s and onwards, you can see that they are almost worthless. And that is because so many people speculated that they would appreciate in value later. And you can therefore very easily find them in good condition, which means that they are less valuable than a comic book from the 1930s, where you can find very few of them in good condition. And this goes for most collecting categories. If they are in good condition, despite their age, they're rare, and there's a large market of people who want it, it's generally going to have a high value. Now, connecting this back to NFTs, you can tell that most of the buyers of NFTs are not buying them to consume them, but to flip them to find a greater fool which is willing to buy them for even more. And as you will see later in this presentation, they are not rare. So there are a lot of speculators and no real organic collectability. So because of this, in my opinion, the NFT market looks a lot more like the tulip bubble or the Beanie Baby bubble than any high-end collectible market. And the next point is no real utility. And in my opinion, NFTs have no utility. And if you take a look at the dictionary definition of utility, it is the state of being useful, profitable, or beneficial. Now, in general, when you buy an NFT, you're basically buying a unique link to a JPEG that is widely available online. Now, what is the usefulness of that? How is that profitable? You're basically playing a zero-sum game where the only way you can make money is from finding a buyer that's willing to pay even more for it. And then some NFT collectors or sellers might say that it has some utility in that you can use it to show off your wealth, in that you buy an expensive NFT and then use it as your profile picture. But the reality is that you do not own the copyright to the image. So anyone can just take the picture that you paid a fortune for, take a screenshot, and then use it as their own profile picture. So it's very easy to troll the owners of NFTs, which makes it less of a status symbol, in that you never know who actually owns the NFT. Now, you can of course take the time to check who actually owns the NFT, but you'll still realize that the owner of the NFT does not actually own the copyright of the image, and the only thing the ownership of the NFT really symbolizes is that the owner makes really bad financial decisions. Now, the next point on my list is that the NFT market, just like the crypto market, is mostly completely unregulated. And as much as I like the efficiency of the free market, you have to keep in mind that when there's no regulations, there are going to be a lot of market manipulators who are going to manipulate the market in a way that would not be allowed in the stock market, for example. So there's going to be a lot of rug pulls, a lot of pump and dumps, and general market manipulations and scams. And because of the lack of regulations, you will see that most of these scammers and rug pullers will get away with what they did. Now, in addition to the scams, the prices are also highly manipulated, and that can be done in several ways. You can, for example, buy from each other so that you boost each other's prices, and you can also get influencers and rich market manipulators to affect the prices for your own benefits. And I've seen that a lot on YouTube with the larger YouTube influencers. And again, because of the lack of regulation in this market, most of the market manipulators can get away with stuff that they would never be able to get away with in more sophisticated markets like the stock market. Another downside with NFTs is that you often have to pay extremely large transaction fees to the creator. Paying a 10% plus transaction fee for selling your stocks would be considered ridiculous, and that would also be the case if you had to pay a 10% creator fee to the builder of a house that you're selling. Another reason to not put your money in NFTs is in the way they are produced. Most NFTs come from investors contacting an artist to make a few artworks, and then the investors use various methods, often scripts, to mass generate NFTs. And using these techniques, they can make thousands of variations of that NFT in just a few seconds. And I can show you an example of someone who contacted me and they needed help with a new NFT generator that they were making, which would enable them to create thousands of different NFTs with just a few clicks using existing art. And you can see this with even the most expensive NFTs, that they are usually made to be mass produced and has very many variations of the same design. And another reason is that there's barely any incentive to stop minting new NFTs for the creators. So from what I've seen, looking at the different NFT markets, is that the artists and the investors will usually pump out NFTs until it's no longer profitable. And with these low costs of production, this means that many of the more expensive projects will keep pumping out new NFTs for a long time. And this will of course make the existing NFTs less valuable as there are more of them and they become less rare. So there's obviously a conflict of interest between the artist and the buyer of the NFT, at least the buyer who wants them to appreciate in value. Another reason for not investing in NFTs is that the influencer or artist that you bought the NFT from will probably be completely irrelevant in just 10 years from now. So NFTs are obviously usually very bad long-term investments. Online influencers and digital artists usually have a quick rise to fame and then a fairly quick decline as well. So you can just imagine what a FusiTube or Smosh NFT would be worth today with their fading relevance. And that can also be expected for a Logan Paul NFT, for example. He's probably not going to have the same relevance as he has now a decade from now. And the length of the popularity of different artists online, especially the NFT artists, is usually fairly short. So you can't really expect NFT artists who are very popular now to be so 10 years from now. So they're probably going to fade out of relevance, just like many of the YouTube influencers are. And the last reason not to invest in NFTs is that there are of course way better ways to invest your money for the long term, which are both less volatile and much more safe. So let's go over the main alternatives. And the first one is of course the various index funds. I'm not going to tell you exactly which one to choose, but in general you can expect to get a 10% return on average from index funds, where you just buy tiny shares of many different companies. And the beauty of this diversification is that you can decrease the volatility of your portfolio while still keeping a high expected return. And this is why, of course, diversification is called the only free lunch in finance. And with the power of compound interest, you can get amazing returns in the long term fairly consistently. And a normal scale might be a bit misleading because it looks very bubbly, but when you take a look at the logarithmic scale, you can see that the returns of the S&P 500 and other index funds are fairly consistent. Another great alternative to investing in NFTs is of course in real estate, and real estate generally gives you great tax benefits in most countries when you own your own place, and you can also get some good tax benefits from being a landlord in addition to the rental income that the properties generate. And I would say, as a general rule, you should focus on your education, career, or business instead of wasting your time gambling on NFTs, cryptos, or individual stocks. Don't waste your time trading when you can use that time to make money or improve your skills. Okay, so the summary is that NFTs provide no yield, they have fake scarcity and no organic collectability, which is bad for their long-term value. They have no real utility. The markets are unregulated, which means that the market is filled with scams and a lot of market manipulation. There are also very large transaction fees for the most part. The NFTs are mass-produced very cheaply, and there is no real incentive to stop minting new NFTs for the creators. You also have to keep in mind that the influencers and artists behind the NFTs are most likely going to be less relevant in just a few years from now. You also have to factor in the opportunity cost of putting your money in NFTs instead of investing them in real assets like index funds and real estate. So all of these reasons combined is why I would never put any money in NFTs, and why I recommend you to stay away from NFTs as investments. If you want to buy NFTs just to support the artist, you can do that. But as an investment, they're absolutely terrible.